Hello, traders. This is Michael coming to you from GammaEdge on Friday, April 25th with our pre-market morning strategy and briefing session. Happy Friday. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model that continues to improve. We discussed this yesterday about the possibility of the bolded CT, which is our cumulative tick. The market trend model is based on the tick index. And we just add a time component for an overall trend of the market of buying versus selling. And we discussed the possible of the bolded white line, which is our CT, continuing to move through our colored ribbon and to the upside if we saw buyers step into the market and take back control, which they did as of yesterday. So now we'll continue to watch for this bolded CT to emerge out of the colored ribbon. The colored ribbon, for reference, is our longer term buying versus selling of the overall market. And it continued to the downside with a negative slope. So we need to see this bolded CT emerge above the colored ribbon and continue to the upside to start changing the slope of the overall market, indicating on a longer term fashion we may be changing the direction to the upside with a sustained uptrend. Again, we're still prone to failure as we enter this colored ribbon. We could move into the ribbon and have a failure, as we've seen historically over the past. Getting into the ribbon is also a key component, as we've saw previous failures over the past few weeks. Referencing the breadth indicator, new highs versus new lows, the past 3 days, new highs have been outpacing new lows by not by a significant margin, but again, more stocks are being bought than sold, which indicates that buyers are stepping into the overall market. And this cyan line here, this is our filtered cumulative tick. This is filtered by plus 1,000, minus 1,000 larger block orders. So obviously these are bigger players or institutions in the overall market. And now we've had 2 days of some decent overall filtered cumulative tick buying. Yesterday was just, the previous day before that was just a slight down day, but now we see these 130,000 tick indications indicating that institutions were stepping in the overall market. So again, we'll continue to watch this to see if we see an emergence of the bolded CT through the colored ribbon and to the upside. Obviously, at the least, we'd want to stay above these moving averages. This is our short-term trend indicator to continue on this trend and possibly have a 3 to 5 day or 7 day move to the upside. Price action, we obviously want to take out these local highs on the SPX indicated by the green here, which we'll look at a price action chart here in just a few minutes. Moving on to the SPXA, this is our cruise ship. This is our longer term expiries, monthly and quarterlies. And again, we follow the SPX options structure because it's the most liquid and the largest that we can look at and check where market participants are positioned. So again, institutional positioning via the SPXA, we split that in two halves because we want to see where larger market participants are positioned. Still put dominated within the overall structure, but if you scroll back to any of our previous pre-market videos, you'll notice that this was completely red negative net delta about 3 to 4 to 5 days ago, and now we continue to see the structure improve. Obviously, as price continues to advance, we start picking up more out of the money calls and then start reducing the in the money puts just via the spot price moving up. But also if you see any closure and change in the net OI, that obviously is mechanically opening and closing of contracts. Obviously, again, indicating that these are larger expiries. So if we continue to see this structure change to a more call dominated state, then it indicates institutions or larger market participants are speculating on out in time that we could see a price appreciation within the overall market. Moving on to the SPXP, we like to split this, as always, as I said, between the AM and PM expiries. These are shorter dated contracts, 0 DTE to weekly, and this gives us a good idea of what is going on in a shorter term time frame with market participants. So we are now call dominated above and below spot price. So you can see via the net delta here, this is positive, call dominated. And if you look over at the net OI, obviously this is green to the upside, also indicating call speculation is alive and well. And so again, you'll notice the condor we talked about yesterday is back today with 3x the previous position size. So to the upside, we see 55, 45, 55, 50. And to the downside, we see 5410, 5405, and then 5400. You'll be able to see this on the 0DT as we move on here. So again, a very wide or a wide transition or a larger transition that's below us and spot prices above us. So that is bullish, but within the overall structure of the condor, this could be a very volatile, choppy area that we continue to try to traverse. So we'll move on to the SPXP 0DTE. And you'll be able to see the iron condor laid out very well here with our gradients here at 55.45 and 55.50, and then down here at 54.10 and 54.05. And again, within this overall, between the condor legs, you'll notice the net OI, and we do have low exposure areas in there at multiple places. So if spot price starts moving within this overall structure, we can quickly move some of these areas, and then we stall at some of these larger net OI areas that we've outlined here, and then obviously the gamma and delta associated with moving through those strikes as moneyness matters, whether they move in the money or out of the money. So draw your attention obviously to 5,500. That's a key level that we're below pre-market so far. So if we try to move into that 5,500 level and see some sort of rejection, I'd anticipate some more weakness down here, and most likely just choppiness within this overall area under 5,500. If we do get above 5,500, I would look for a long position to move up towards this upper leg of the condor. Like we saw yesterday, we saw some stalling and then move just barely above it into the close, kind of choppy around that upper leg. If you recall the price action from yesterday, not really anticipating that we move significantly down towards this lower leg of the condor due to this significant amount of in the money net delta below us. This can be dampened as we move down. But again, if we'll look for our intraday volume analysis on our volume command, and if we see negative slopes on the call and put centroid, indicating that put speculators are speculating to the downside, then we definitely could move down towards that lower leg. And then 5,400, that large round number that we have been chopping around and oscillating around for multiple days until we got above and then moved up towards that 5,500 and the 55.35. So moving on to the delta balance for the SPX P. Again, as spot price continues to move up, you'll capture those out of the money calls, and this can change the overall delta balance. But again, projected on out in time, we want to see this stay at the one level with the blue line, which is our delta balance, and you want to see the right-hand plane, which is the green, stay above zero, indicating call speculators are continuing to speculate above spot price, as well as the red line, which is below spot price. That would be in the money calls below us. That needs to continue to stay above zero, indicating that can be supportive on any move back down. A little bit of interesting yesterday, even with our price appreciation, we did not see the right-hand plane move up as much as I would anticipate. So we'll continue to watch that. We do have some in the money puts above us in the right hand plane. So that is most likely why this green dotted line did not cross significantly above zero. So we'll look at that here in just a minute. Moving on to the SPY, as we said yesterday, it had improved much more than the SPXP, as well as the QQQs improved also. So you see the green line above zero, indicating out of the money calls are in control, and then delta balance and the red line in the money calls are in control below spot price. So again, supportive type action, speculative type action to the upside for SPY as of now heading into the day. QQQ, again, as I said, the same with SPY, above zero in the right-hand plane, so call speculation is alive and well there, but it's just barely above zero. So this could be also an indication that we got that quick move up, but then the call speculation did not continue to come in. And that's why we don't see that significant advancement of the green line to the upside. And then delta balance and red line staying above zero and close to one, indicating that in the money calls below spot price are still alive and present, and then dampening type effect on any pullback. So we'll continue to watch that day over day. GEX ratio for the SPX, we had spoke about that multiple days, that with price appreciation, you wanted to see the GEX ratio appreciate, and most likely it would as we started capturing those out of the money calls become in the money. As the calls, it's the calls versus puts numerator, denominator, and then we add the gamma component, which is a time component. So what would have been an indication that most likely we would not be able to sustain the price to move up is if the GEX ratio started to flatten out with price appreciation moving to the upside, indicating the short dated call gamma was not keeping up with price appreciation. So that would indicate to us that the short dated call out of the money speculation was not increasing dramatically, and that leaves still to in the money puts above, so the GEX ratio would start to flatten out. Something like this as a price would appreciate, and that's a divergence that we always continue to look for. Same thing with the downside. If we see price depreciating, but we see the GEX ratio not moving down, that would indicate that out of the short dated, out of the money put speculation is not increasing as fast as the spot price is moving down, so indicating that most likely the price depreciation can start to flatten out and we may not get a significant move to the downside. So just a couple of divergences we always like to watch with market participants and option positioning. Again, a reason we watch the option structure very intently. Heading into today, this is our net stack command. This just indicates the highest sensitivity. I forced spot price at 54.73. That would be a projected open, which we can check here in a few minutes. So again, you'll notice on the 0DT, we still do have in the money puts above us via this net delta, even though it's at 56.50. So again, not completely call dominated to the upside, but we are call dominated here at 53.50 within the money calls below us. So most likely this would be supportive type action if we're below 5,400 or even 5,500. So anyway, just key areas we'll watch: 54.10 and then 55.45 to the upside. So let's move on to our trading view chart for today with our overlays heading into this morning. These are our gamma delta scripts as we move into the day. 54.60 is going to be a key area. This COTMP is proprietary to GammaEdge. This is basically an area where out of the money puts will move in the money. And this is an area that we historically have seen most likely put monetization as we move into that area, as put holders want to be paid for their risk. And we're seeing that bounce almost off to the penny this morning there at that level and move back up. Now, can we move below 54.60? Absolutely. It's really a fear or a fear and greed component. If these put holders want to maintain their risk and then look for a downside move towards 54.15 or 5400, that absolutely can happen. But as of now, we're just bouncing around that 54.60 level. So we'll continue to watch that. 5500 to the upside, we've already discussed that. That's a significant level that we need to traverse. I would anticipate some sort of stalling rejection to that level if we try to move back into that area. So we'll continue to watch that. If we do get a rejection there, I'd possibly look for more weakness depending on what our MTM and cumulative tick is doing, as well as our vol M command. If it's indicating that we're in a downward slope with negative centroids, that would indicate out of the money put speculation, so the possibility for us to move down. If we traverse above that 5400, then we have supportive type levels. We'll watch the vol M command again, and if we have two positive slopes in the centroid above 5500, I'd look for a trade up towards 5530 and then 5545. Noticing this local TA high here is also confluence with our P-trans level. So again, this could be a possible stalling area depending on what the option structure looks like intraday, as well as our vol M command and the market trend model with the bolded CT moving to the upside. So as of now, pullbacks will most likely be supportive unless we see a significant change in the overall market trend model or the vol M command with put speculation to the downside. So I'd be looking to get involved in the market on pullbacks to the downside, to key gamma delta levels or moving averages, whatever your preferred plan is. And then to the upside, 5500 would be that key level, and then 5530 to 5545, we have those double IC strikes above us also that could cause some stalling and pausing action for the rest of the day. So with that, everybody have a great Friday. Thank you all for the interaction this week. We went live multiple times on Spaces this week for intraday recaps. Make sure you follow us and be notified when I do go live. Sign up for our newsletter. Significant education comes out for free over the weekend, reviewing multiple areas of option structure, how to traverse option structure, what we look for if the market is turning. So anyway, come and join us in GammaEdge, free 14-day trial. Check out all of our tools, and we'd be happy to help you get up to speed as quickly as possible. So thanks, everybody. Make it a great day.